Are you a college student or young adult struggling to manage your money, feeling overwhelmed by the balance of classes, social life, and a part-time job? You're not alone. In this video, we're breaking down personal finance tips specifically for young adults and college students. Stick around and you'll walk away with practical steps to start mastering your finances today. Let's kick things off with how to start preparing financially for your future as a young adult. It's never too early to start planning, and here's why. According to a study by the National Endowment for Financial Education, those who start financial planning early are significantly more likely to achieve their financial goals. So, how do you start? First, set a budget. This doesn't have to be complicated. List your income sources like part-time jobs or allowances, and track your monthly expenses. Use tools like Mint or YNAB to make this easier. Next, identify areas where you can cut back. Maybe skip that extra coffee or cook at home more often instead of eating out. Small changes add up. Now, this is something both of my two college boys experienced quite often. They like to eat out. It's more convenient. Grab that fast food, but they don't realize how quickly that started adding up. And of course, once we went through the finances and learned that, they started really seeing where they could save money, right? And not to mention the fast food that you tend to eat all the time, that's what starts to happen. So it's not healthy. So that's another major reason, probably more important than anything, is to also be concerned about your weight, right? And your health. But also this is about financial savings and very, very important. Start cooking inside the house more. It typically creates more healthy eating habits as well, which is a nice little perk. Finally, set some financial goals. This could be saving for a trip, paying off a credit card, or building an emergency fund. Write these goals down and keep track of your progress. Trust me, your future self will thank you. Now, me personally, I used a spiral notebook for each credit card I had and the balances for each. Then, using the avalanche method, I would revisit my list at least every month. Oh, and I'll link a video up here somewhere above that's going to talk about some of the different methods for reducing debt. The number one takeaway is to regularly look at your finances so your mind is continuously working on solutions to improve earnings and reduce debts. If you think planning is important, hang with me until the end, where I will share one of the most common questions being asked by students and young adults. But next up, let's talk about how to pay for big ticket items like a new laptop for school or even a car. Big expenses can be daunting, but with a little planning, they are manageable. Start by researching and comparing prices to find the best deals. Websites like Amazon, Best Buy, and Newegg often have great deals and student discounts. Once you've found the item you want, create a savings plan. Set aside a portion of your income each month specifically for this purchase. Then open a separate savings account if that helps you keep the money safe. Consider looking for used or refurbished options too. Sites like eBay and Craigslist can have great deals on gently used items. And don't forget to check out student discounts or financing options available to you. I know it's easy to apply for that next credit card and get the immediate gratification of slapping that purchase on a credit card so you can have it right now. Don't make that mistake, fool. I personally have always had a problem with controlling my own impulse buying habits, and I assure you, it's not fun having what feels like a 1,000-pound debt monster sitting on your shoulders 24/7. And as a matter of fact, those habits forced me into bankruptcy in my early 30s. And I want to help you avoid that embarrassing and extremely stressful situation. Being mindful of large purchases and setting a budget is important, but these next steps are absolutely critical. One of the most important lessons in personal finance is living within your means. Spending less than you earn and avoiding unnecessary debt can set you up for long-term financial success. A survey by the Federal Reserve found that nearly 40% of Americans would struggle to cover a $400 emergency expense. Don't be part of that statistic. Budget wisely and prioritize your needs over wants. And here's how. Start by distinguishing between needs and wants. Needs are essential, like rent, food, and utilities. Wants are things you can live without, like that new pair of shoes or a fancy dinner out. Create a budget that allocates money to your needs first. Then, if you have extra, you can enjoy some of your wants. Remember, It's okay to treat yourself occasionally, but make sure you're not sacrificing your financial stability to do so. Now, with all of this being said, I still want to discuss one of my favorite quotes by Robert Kiyosaki. Never say you cannot afford something. That is a poor person's attitude. Ask how to afford it. Now, this is a slight mindset shift that will help you crush some limiting beliefs, but by no means does it mean going out and charging something on a credit card or getting a loan for that toy or doodad. Kiyosaki is referring to figuring out ways to increase your income and improve your growth mindset. Then ultimately creating more passive income streams that will pay for those toy loans, etc. I will share more about this in future videos. And if you're new here, smash that subscribe button. Living within your means is critical, but building a savings account is crucial for financial security. Start by setting small, achievable savings goals. Automate your savings if possible. For example, set up a direct deposit that transfers a portion of your paycheck into your savings account. Now, I love this strategy because in no time, you will forget about that extra income being extracted from your account each month. Now, I personally still use this technique, but since I'm a millionaire now, I automatically divert little chunks to multiple accounts in investment. So it's almost out of sight and out of mind. But of course, I still review everything fairly frequently, so it keeps me motivated to keep building for my family. Aim to save at least 10% of your income, but even 5% is a good start. Over time, these small steps can lead to substantial savings. Also, consider opening a high-yield savings account to earn more interest on your savings. An emergency fund is a great place to start. Aim to save 3 to 6 months worth of living expenses in case of unexpected events like a job loss or medical emergencies. And once you have a solid emergency fund, you can start saving for other goals like a vacation or a new car. Actually, let me back up a little bit and emphasize that reserves are huge. And once you become more advanced and maybe you end up with some rental properties, one of my favorite wealth strategies, having reserves is critical when economic downturns arise. And they will definitely appear in your lifetime, guaranteed. Now, you will often hear me talking about my semi-hatred of conventional savings accounts because of the lack of interest paid. But for the scope of this video, it's still a good idea to learn the basics of savings accounts and simply get started. I will teach some more advanced strategies and different vehicles for making more money with your savings in future videos. But first, we need to crawl before we walk. Savings and reserves are an important part of becoming more financially literate, but these last two steps are game changers. Let's talk about taxes. Yes, taxes. As a young adult, understanding taxes is vital. Whether you're working a part-time job or freelancing, you need to know your tax obligations. First, make sure you understand how much you need to set aside for taxes. If you're an employee, your employer will withhold taxes from your paycheck. If you're freelancing, you'll need to set aside money yourself, typically around 25, maybe 30% of your income. Next, take advantage of the resources like the IRS website and tax software like TurboTax. These tools can guide you through filing your taxes correctly and on time. Now, don't forget to look for tax deductions and credits you might be eligible for, like education credits or student loan interest deductions. You gotta love the IRS. They're my favorite too. Also, if you don't do freelance work or you haven't created a side hustle, you are missing out on some huge tax incentives. I personally think everyone and their brother and their sister should have a freaking side hustle. With just a little education, you can set up your own limited liability company and truly offset a good chunk of your W-2 employee taxes with relatable expenses. Because my business is both online and offline, my affiliate distributors are taught to write off anything from their entire cell phone bills and internet bills to mileage driven in their cars. This is literally free money being put in your pockets. Now, a little disclaimer. I'm not a CPA or a tax professional, so you will need to seek professional advice once you get started. I'm just saying. Finally, the biggest question of late has been, should you rent or own? This is a big question many of us face as we move out of our parents' homes. Renting offers flexibility, fewer maintenance responsibilities, and often lower upfront costs. This can be perfect for college students who might move around frequently for internships or new job opportunities. Owning a home can be a great investment, but comes with added responsibilities and expenses like maintenance, property taxes, and homeowners insurance. According to the U.S. Census Bureau, 65% of Americans own their homes, but renting might be the smarter choice while you're still in college or a young adult. Think about your long-term plans and financial situation before making a decision. And quite frankly, there are many more advantages and strategies around renting versus owning. So don't feel discouraged about the current national landscape and how difficult it has become to own your own home. Instead, learn more about the upside of renting and invest the money that you would have otherwise spent on maintenance and repairs into something that will far exceed the slow equity buildup you get with home ownership. So there you have it. Thanks for watching. Remember, taking control of your finances now sets the foundation for a secure and prosperous future. And stay tuned for future tips and tricks on financial education, and I will see you in the next video.